How to start trading the Forex market and other things to know. What is Forex, or the currency market? The Forex market, also referred to as the FX market, is a financial hub in which currencies from all over the world are traded. It's larger than both American equity and U.S. Treasury markets combined. It trades 24 hours a day, 7 days a week. Why trade currencies? It offers high leverage, low to bang, for little invested bucks, x, 50 to 1, a beginner should use low leverage. Traders can make their decisions about when to buy or sell a currency at any time. And as markets could change suddenly, it's important they keep watch on the best times for placing trades. New traders should start small with little money before increasing resources over time so that success is achievable. There are over 100 cross pairs, but a novice should focus on 2 or 3 of the pairs to get familiar with trading in general. There are 8 major currencies: USD, EUR, GBP, JPY, CAD, AUD, NZD, and once again they trade in pairs: Euro to US dollar, Pound sterling to Japanese yen, Australian dollar to Swiss franc. Find a reputable broker that has been in business for a decade or so, because there are many scammers. Who will take your deposit, but when you make profit they do not pay out when you request withdrawals. Treat this new endeavor like a business and write out a trading plan. Include the time of day you'll trade, what you'll trade, and the strategy you'll employ. Meticulously journal your trades, because you are looking to take trades that have a winning edge in the currency market. Do a weekly review, and gather 100 to 200 trade before a full strategy evaluation. Also risk no more than 1% of your account balance. Any strategy with more than a 30% drawdown should be optimized or switched out. That's it for this lesson.